All right, we're back in the studio with the $1 Million Mortgage Experience podcast with Andrew Ojeisekhoba. Welcome to the show.
Thank you very much. Thank you for having me.
Yeah, I'm glad to have you. It's great.
We're looking forward to this, and it's exciting. Thank you.
Absolutely. No, thank you for coming in, and you've been in the mortgage business quite a while, over 20 years, right?
20 years, yeah.
What in God's name got you into the mortgage business? We all have our different stories, right?
Yeah, we all have our different stories. I originally, I'm from Nigeria.
Okay.
I've been in this country for about 25 years, going on 26.
You went right into the mortgage business. You got here, you're like...
I was here, I went to college here. I was lucky enough to get a track scholarship.
Wow.
That was
so
how
you
I got
can
to
run.
the US. Yes, I can run.
That's awesome.
Because back home, it's like you either have a car, which only maybe 20% of the population has, or you take a bus, which is usually like super duper crowded.
Yeah.
Survival of the fittest kind of thing.
Yeah. Can you fit in there, right?
Or you run.
Wow.
From point A to point B.
Well, nowadays with gas prices, are you running again?
I just stay at home.
Stay at home.
It's easier.
Wow.
So I was lucky enough to get a track scholarship. I finished college, and I knew I had a degree in business finance.
Okay.
I knew I wanted to do something with money. And then I started with Ameriprise Financial. I was going to be a financial advisor. But I had a lot of things stacked against me, which is, number one, I didn't have as better enunciation skills like I have today.
But you spoke English?
I spoke English,
oh, good.
Yeah. And in Nigeria, we're used to talking fast.
Mm-hmm.
So I spoke too fast, and people couldn't hear a word.
Wow.
So today, if you fast forward today, I had to take a lot of classes and training on how to really communicate better
and slow it down.
And so I was looking for a job, and I landed a receptionist job at Countrywide.
Wow.
Yeah, I was so excited. $5.75 an hour.
Wow.
Yeah.
Where was that at? It was in San Diego?
No, that was in Orange County.
Okay.
Right off of MacArthur. There used to be that
mortgage mecca there.
Right there. Yeah. So
that was the mothership.
That was where, Hutton Center Drive.
Oh, wow.
Yeah. There was maybe 30 mortgage companies on Hutton Center Drive.
Yep. They're all there. And then you just couldn't get out. It's like a curse.
Yeah. I went there just say, okay, I need something. I was out of school, and so when I got the concept of what mortgage was, because I was trying to become a financial advisor where you had to take the CFP exam and all of this thing. And then somebody told me, well, if you can convince me that you are who you say you are on paper, then I can borrow you $1 million. I'm like, that's it? It's like, yeah. Yeah. I'm like, said, this is the rules. Convince me. And if you fit all the guidelines, that's it.
You get $1 million.
I'm like, so yeah, so I got hooked and I started studying.
That's awesome. How long did it take from receptionist to loan officer? How long did that take?
It took about 10 years because I was hooked on underwriting. It just didn't make any sense to me to say you meet these rules, you can get a loan, so much money for a house.
Yeah.
It took me a while to figure that out, so I wanted to be a really good underwriter.
Did you go from receptionist to another job?
No, from the receptionist to opener. In those days when we have, the package comes in the mail and you open them and you stack them in a file.
Right.
Yeah, that was my job.
You knew it, every little W-2 or whatever.
Everything.
Yeah.
So I was a stacker, and then from a stacker I went into becoming a dock drawer. From a dock drawer to a junior funder, from a junior funder to an account manager, from account manager to junior underwriter.
Wow.
Then to underwriting. And I sort of grew some shoulders. I said, you know what, I'm going to go do this loan officer thing. These account executives, they know nothing. And they come to me, ask me all the questions.
Yeah.
And they make all the big money. And I'm like, I'm going to go do this. But I had no idea that required sales training.
Sales training, yeah.
So
there's a lot of skills, right, that you got to have to be a loan officer. I mean, there's more skills you need to be an underwriter.
Yes.
But I think having an underwriting background, then going into being a loan originator, if you have the right sales skills, is next level. I mean, you're like the full package, right?
But I failed miserably my first 2 years because I was too analytical.
Like, oh, you're not going to qualify.
Yeah, I wasn't trying to. I was so guideline focused about no, sorry, you don't qualify. Have a good day.
Yeah.
So I had to pretty much think out loud, and that was around 2008, 9, and then everything went down the hole, right?
Yeah, it really did. It was. We try not to remember those days,
Yeah.
but that happens, right?
Yeah.
And it needed to swing kind of back the other way
It
a little
did.
bit.
So everybody was running out. I ran straight head on. I'm like, perfect. Less competition.
Yeah.
That was what I was thinking about that time. Less competition. Let me go figure out who's doing what.
Yeah.
So I went from the normal FHA conventional VA. I'm like, what is this alternative program? Who's doing what?
Yeah.
And that was what I really focused on, and that really opened up my eyes into today's NonQM.
Yeah.
Yeah.
It's definitely different than it used to be in a lot of ways, but it still feels sort of kind of the same because banks aren't doing it, right? And banks turn people down, so you're still kind of in a way you're saving the day because the bank said no and you're coming and saying yes. But don't you think that now like the credit profile is a lot better?
Way better.
Yeah.
It's amazing that I would say about 80% of the people we help in the last year have credit scores over 700.
Yeah, I agree. Same here.
It's amazing to see people with. So it just, I've been doing a lot of studying, and it brought to I kind of realized that, wow, okay, so these people are not bad borrowers.
Right.
They just have different ways of, reporting their income, which, threw them out of what Fannie, Freddie, and
right. They just don't fit in that box.
They don't fit in that box, and these are people who want, they want customized service.
Yeah.
They're not looking for the, give me in the box. So that's kind of what I realized.
Yeah.
Yeah.
So, is it safe to say you kind of like NonQM?
I love NonQM. I'm in love with NonQM.
Yeah.
Like I love doing loans generally.
Yeah.
But I love solving problems.
Yeah.
I think that's what NonQM is looking at somebody who, should get a loan now.
Right. They should qualify, but they for some reason don't fit in the box. Yeah.
They should get a loan now. And what do you want to restructure down the road so you can, get into FHA or conventional? Sure, go ahead, but you should get a loan now.
Yeah.
Yeah.
And there's a huge benefit of getting a loan today versus a year from now.
Yes.
As we can just see in the last 12 months how much the values have gone up.
Yeah.
People have been priced out. They can't get into a house because 12 months ago it was worth $600 and now it's $750 and they're like, I can't afford $750.
It's amazing how things have evolved. I mean, none of us knew that. I mean, I think I go back March of 2020, and we know that it was almost like a 2008 and 9 again for about a month.
Or more than maybe a few months, right? I mean,
March, April, my team and I were like, what are we going to do? What are we going to do?
Right.
But I think this industry or this sector of the industry is not going anywhere. It's only going to evolve into different things because the need is just too great.
And they're trying to automate everything, right? I mean, they want to do it. At some point, they think it's going to be Alexa, get me a mortgage, right? And Alexa doesn't know how to look at, the nuances of a file and understand why, they had all the money, but their accountant forgot to make the payment or, and the reason. And so, yeah, you're right. I think this space will be here for a long time.
I think Alexa dictates, right?
Yeah.
Alexa doesn't think, really. I mean,
no, she just is a computer algorithm, right?
So because life moves and life changes and life is life.
Yeah.
I think that's why, the problem we had before, in my opinion, in the BNC, sector was the regulation was just really bad, and it was just all kinds of stuff going in, but now I think people are more reasonable about no, let's do it better. Let's have a better experience. Let's have a better, outcome. And I think that's what's really helping and growing NonQM.
Yeah. And I think nowadays with the requirements of a bigger down payment, skin in the game, you have some better loan quality, right? When you do zero down and no income, nothing.
Yep.
So you got in, what year was that when you finally became a loan officer and you said you had a couple of years? Was that like 07 or?
2014.
Is when you were a loan officer.
When I actually said, okay, yeah, I want to do this. Yeah, I tried in 2010 and 11, failed miserably, could barely feed myself, my family. And 2014, I went to work for a small lender. I was the key loan officer. And just went all in.
Yeah.
Didn't matter what anybody had to say about loans. I'm like, no, I strongly believe people need this.
Yeah.
It wasn't about the money that was going to come out of it. It was about that this is a tool that a lot of people could use to change their lives.
Right.
And that was back in 2014. I had that strong conviction that this is what you need to get into this now so that you can get the house like you said, and 3 years later you want to go ahead and refinance it to an FHA loan, fine.
Yeah.
But use this product right now, because if you wait, home values are going to go up.
Right.
So I went head on and haven't looked back still.
So when did you start the company that you run now?
2013.
Okay. So you went right in, like you said, I'm going to be a loan officer, and then I'm going to start a mortgage company.
I'm going to start a mortgage company, and it was rough. I barely got my foot going. 2017, here comes the first audit.
Wow.
From the state of Texas.
Oh, man. Yeah, they're no joke.
I'm like, what? What's that? It's like, yeah, audit. And I had to go to Texas.
Oh, they made you go?
Yeah.
They came here to audit us, but yeah. Or maybe we did over the phone. I don't remember. But
I had to go there.
You did?
Yeah. And so the first thing I told the editor, I don't know what I'm doing. I'm a loan officer.
Yeah.
I'm like, well, we have some questions.
We need to talk. Was it in like Houston, or where'd you go? Dallas?
That was in Houston, yeah.
Houston, wow.
Yeah.
Yeah, and that was probably scary, right?
Yeah.
Right away?
I was, I had a couple sleepless nights from the first day I got a phone call to when the audit happened. So, but we've been through 2 audits, and now I feel like I have a better understanding of what the regulation is, what the consumers needed, and I just have a better understanding of what's needed.
Yeah.
What's and we just want to do really good for people. That's
right.
Yeah.
So you did that audit, and then so you have a few state licenses. You have Texas, California, a couple others.
Colorado, Florida, Georgia.
Nice.
And Oregon.
Okay.
So I finished the audit in Texas. And in 2018, Oregon comes knocking, say, hey, it's time for your audit. I said, so how can I get out of this? He said, well, I mean, you can surrender the license. I said, yeah, sure, you can have it.
Wow.
Because they want me to come to Oregon again. And I was still trying to pitch pennies together to run a company and do all of this stuff. And I'm like, I looked at how many loans we did in Oregon in the past year. It's like 2. I said, okay, you can have the license.
Wow, so you forfeited the license.
Forfeited that.
But then you got it back.
Well, I haven't gotten it back yet.
Okay.
But I got other states in the process, and but I've come to really appreciate we did then 2019, here comes Texas again, a second audit.
Oh, wow.
Right? But I've come to really appreciate that process.
Yeah.
It's made us so much better in terms of packaging our loans and making sure we're completely compliant in everything we're doing.
Yeah.
And getting ready for audits.
And if you think about it, it's not that bad, right? I mean, it's a couple days.
Oh, it was bad the first time.
But you made it through, and you were able to keep going. It wasn't like maybe you had a fine. You don't have to tell us, but if you have a fine, they're not like devastating fines, right?
No, it's not about the fine. It's just the stress
of what's coming,
what's coming, or the unknown, and you feel like you're in the witness stand, for weeks,
right? And especially when you don't know what's coming, right? Like, and
I still have to originate.
Yeah.
In Texas.
You still have a job, and then now you're the person doing the audit, and you're on the, you're under the
So
microscope.
that wasn't fun at all. And
No.
I just thought, man, if I ever have to go through this again, so we hired a compliance manager.
Good. That was a smart move.
And her job now is to make sure that she literally gets on everybody's case for every little dot. No, you need to get that to me. You need to do this. So we do that religiously every week.
That's good.
Yeah.
So you mentioned COVID was a couple months for you. Was there some sleepless nights there during COVID?
Yeah, I mean, it was rough because, when you build a customer base like we've done,
mm-hmm.
and you're the one they want to call,
right?
You can only tell so many people you have COVID. They're like, well, sorry about my loan,
Right. Yeah.
Like, so who's going to take care of my loan? So I had to walk through it. It was, thankfully,
yeah.
I felt like I got hit by a truck like every second.
Mm-hmm.
But, we just had to walk through it. And I was grateful that I was able to.
Yeah, that's good.
Yeah.
Yeah, I mean, during the pandemic, like in the early days of the pandemic, like April of 2020, May,
mm-hmm.
When some of these loans just disappeared, like was there some challenges you faced during that time?
Yeah, I would say complete depression for about 2 months.
Yeah, same.
We had 80 customers, all non-QM.
Wow.
Everything died.
Were you just getting calls left and right about it?
I had to call them. I called, every lender's like, sorry, so move all the pipeline, move it over here.
Right.
This one, oh yeah. And then one of, I think it was one of the top lenders called me and said, listen, don't move your pipeline anywhere. Everybody's going down.
Yep. Everyone's on hold.
I'm like, really? Everybody's on hold. They're like, so I had to start calling the customers. And we had 70% of our loans were purchases.
Wow.
So it was...
Did you move any over to like Fannie or anything, or could you not?
No. We could not.
And I think, during that time, people understood, right? Like you couldn't... They were all panicked, but I mean, I think people didn't want to... They were stuck in their house, right? Some people probably were like, get me out of this little house. Maybe they were in a condo or apartment and were like, I need to get to the bigger house. But I think, because it was happening to everybody, I think it was better than if it was just like a subprime crisis,
exactly.
Right?
The COVID overall helped in terms of people understanding the panic.
Yeah.
But for us, it was, we had our employees, and we had our partners, and losing, we were looking, 80 loans dying in 1 month.
Yeah.
Substantial.
It's a big income loss too.
Yeah, income loss. So we have to flip directly to hard money loans, and there was only maybe 3 people doing hard money loans in town.
Mm-hmm.
And we're like, okay, well, let's go do conventional loans, which we don't really preview doing. So we did that for a little bit, because then we had to fight with everybody about rates.
Yeah, true.
Made a little margin here and there, keep the doors open, and thank goodness, non-QM came back.
Yeah, thank goodness.
But it was rough.
Yeah,
it was.
I do remember. Yeah. So on top of being a loan officer, audit professional now, and running the company, you're also a Freddie Mac certified credit smart instructor.
Yeah.
Tell us about that.
Well, I went through a period, when we come out here, most foreigners, when they come out here, there's probably 50% of foreigners who come to America who have no clue what credit is or how it works.
Yeah.
And that 50% get into trouble. I was one of those. You could get credit cards. I was in college. I got like 5 credit cards.
Wow. Just give them to you, right?
Yeah,
like,
they came in. They were like, okay, sign up. And I signed up.
Right.
And nobody told me I had to make a payment.
Wow. Yeah. they just give you, here's money. You'll get something in the mail.
So we get something in the mail, just trash it. Get it in the mail, trash it. There was a lot of people who did that, when I was going to college. And eventually the credit card wouldn't work anymore,
Right.
Because
throw it away.
So started applying for more, and then all of a sudden it racked up so much bills, and so FICO score down the drain.
Yeah.
So I started learning about this credit thing, paid somebody to fix my credit. It was a mess. It didn't happen.
Mm-hmm.
And then let me go read about this. And I started getting educated about it, get some certifications on it, and started helping people. So till date, we've probably helped about 3,000 people fix their credit for free.
Wow.
It's part of kind of like our, perks doing business with us.
Right.
So we target a lot of people who have challenges on their credit, put them on this program, These are people, I mean, I've met people who are millionaires who have issues with credit.
Yeah.
So it's not, it has nothing to do with your income level most of the
Right.
time. It's just people just don't know how to manage stuff the way they're supposed to. So we train them and help them, and they eventually become customers who we close loans for.
Do you think there's like some easy? I mean, there's obviously education is a huge part, but like easy tips that you could share with our listeners. Like, what's something that most people don't know that's an easy tip about like how to get your credit on track?
I think the easiest tip I would share is you don't need more than 3 credit accounts
Right.
to have an 800 FICO score. Most people think, oh, I got to get this credit card and that car and this car. Well, you know, I've been through a situation where I had, the first time I had 5 credit cards, it went all downstairs stream. It was bad. And then I tried to fix it, and I didn't learn my lesson. And then I got, I think, about 16 different credit accounts and had to go through a bankruptcy. I didn't know enough then. Somebody said, you just file bankruptcy. They'll clean up everything. I'm like, oh, you can do that here? Yeah, sure, because you can't do that where I'm from. I mean,
No,
you owe money, you owe money. You
Right.
have to pay. So did that, and how much did I file in the bankruptcy? $25,000.
small amount. Yeah.
Yeah, and I didn't know enough.
Yeah.
So, but that haunted me for a while, you know, because you can't do a lot without bankruptcy. So, but I come to learn that I had only 3 credit cards, $300 limit for each credit.
Oh wow.
And I made sure that, okay, you can't go over 300 because you're bad with these cards, you know, and made sure when I use them, I pay them back.
Right.
And my scores just went from, you know, the 490s, started growing. Now it's like 790, 800.
Right.
And I encourage anybody who's listening, you know, you can have your auto loan, your home mortgage, student loans. Those ones, obviously, they're installment accounts.
Right.
But when it comes to credit cards, I don't see any reason why anybody needs more than 3.
Right. You don't need more than 3. Yeah.
You know, I mean, sometimes maybe 2, you know. So if you don't have a home, you don't have a car, you don't have a student loan, then you can have 3 credit cards because you need at least 3 accounts to keep those things going.
Right.
Yeah.
Right. And keep them down. Don't max them out, right?
Keep them down. You know, use them, pay them off. Use them, pay them off.
And try to get one with points because that helps you get your airline flights or whatever.
Yeah.
Right?
So for my ideal is we always get, if we have an expense, so I have 3 credit cards and 1 business credit card that has a high limit. So if we have a big expense, we know we have the cash for it. We use the credit card and we pay it off like within a day or 2.
That way you can get those points.
You can get those points, get the benefits. Yeah.
Makes sense.
Yeah.
That's good. So, yeah, I mean, it's amazing what, you know, in school, my kids they're 16 now, but they don't learn anything about credit or finance or mortgages or taxes. And, you know, they're going to be out of high school in 2 years, and it'll be like, you know, they're going to just throw the credit cards at them when they go to college, right? It's, and unless they had someone like us teaching them, they would just get into that trap, you know?
Yeah.
What are some easy things that people, I think I already asked that question, to improve credit, right? Like, well, actually, no, I don't think I did. So let's say someone has the 3 cards and they're still struggling to get their score up. Like, what is a tip that a loan officer can give, to improve that score?
I'm so glad you asked that question. One of the things, if I look hindsight right now, people just need to be patient and you need to have a plan.
Right.
A lot of people think, if I don't fix it this year, my life is over.
Right.
And I was one of those 10 years ago. I thought my life was over. Every year, my life's over. Every year, because it's not happening. But now when I have perspective and say, okay, why don't you have a long-term plan? People who are around me know me about my 5-year plan, 10-year plan, which, thank goodness for Marnie Avila, who says, you know, dude, do you have a plan? I'm like, I want to make a lot of money. That's my plan.
That's my plan, yeah.
Like, no. What do you want to do every month, every year, day in, day out for this much? I'm like, I have to wait that long? It's like, yeah, you do.
Yeah.
Unless you plan to die before then, you know. That's what she told me. I'm like,
wow.
No. So I had to change my mindset and say, okay, I'm in a bad place right now. So even going back, I had a bankruptcy. Literally within 6 months, I was back up in $60,000 in debt.
Wow.
Because I didn't change my behavior. Didn't change my mindset.
So even more than you were before.
Even more than I was before.
Because it just came to you, the offers, the credit card.
When you file a bankruptcy, I'm not sure if you know that, you get like maybe 50 offers on credit cards in the mail within 2 weeks.
They know that you can't file another bankruptcy for 7 or was it 5 years?
There was all kinds of
offers. There's a rule about that, yeah.
I took them all.
Like, let's go.
Let's go. More money. So I would say, folks it's just, you just have to have a plan and say, okay, I'm in a mess right now. What's the plan to get out? And you know what's interesting about the plan to get out? That this is why I love America so much. Mm-hmm. If you can dedicate a plan for 2 years, you will get out of a mess.
Yeah. Is it not like that where you're from?
Oh my goodness, are you kidding me? No, it's not.
I think some people need to visit other places, right? Before it's a whole other topic about America. It's a whole other topic, America has a lot of...
America has a lot of, faults here and there, but I'm just saying this is a country that if you really put in time into one activity, it shouldn't take you more than 2 years to get out of a mess.
That's right.
Say, okay, now I can breathe.
Yeah.
What's the next 2 years like?
Yeah.
Okay, now I have an oxygen tank besides breathing,
Yeah.
What's the next 2 years like? I think a lot of people just get caught up in that current situation.
Yeah.
And they don't think about what's going to happen 2 years from now.
Right. They just want it now.
Now, yeah.
Let's talk about, you love NonQM.
Yes,
I love NonQM. I think our listeners love NonQM. Sometimes people ask me, I do Fannie Mae, I do Govy loans. How do I find NonQM loans? And I have all these ideas because I've done NonQM for, was for subprime, and then it was alt doc, and then then it's, all the make sense lending that we do. And, but I've always had no problem finding NonQM just because I'm not like I'm just more of a creative thinker. I have other major flaws, but one of my strengths is being a creative thinker. And so I would find ways to get non-QM. How about for you? How do you find non-QM loans?
I think it probably came to me naturally being a foreigner, because you have to think outside the box to get to America.
You do.
I think that's number one,
Right.
80% of the people who come in this country who are foreigners, you have to think outside the box. It's not like, here's a visa,
You have problems and you have to fix them.
Oh, yeah.
You have challenges, you have to get around them.
Yeah, you got to get around them. So that is essentially what non-QM is.
Right.
So if you can think of that mindset already, then you're like, okay, so if Fannie Mae says you have 10 properties, we can do 11 for you.
Yeah.
What are you talking about? So the guy should stop investing in real estate? There must be a solution.
That 11th one is really going to take you down.
Yeah.
Yeah.
No. We got to do something about it. That's
right.
You've had a I had a bankruptcy. So you've had a bankruptcy. So it's 6 years and 6 years and 300 days. So sorry, you got to wait.
Right.
Well, the opportunity is right here waiting for me right now.
Sure.
What else can I do? Because if I wait another 65 days, it's gone.
Right.
So if you think about all these things, that's what kind of like drove me to say, you know what, there must be a solution. So we've done a lot of research. There's probably more than 10 million people who are self-employed who say, you know what, I want to pay my fair share of taxes.
Yeah.
But for the first 2-3 years, I don't have anything to pay.
Right.
But I can afford a house payment.
Sure.
Give me an opportunity. I think that's what non-QM is. It's an opportunity.
Right. And it's certainly for a lot of business owners and self-employed people. Yeah. I think that's probably the lion's share of what non-QM is for.
Yeah.
People that just don't fit in that W-2 tax return box that, they're like, yeah, you could afford a $50,000 loan. You're like, well, I'm paying rent, $2,500 a month. Mm-hmm. What you're telling me I can only afford a $500 payment? Well, your tax return says that.
Exactly.
And so you got to have a solution.
Exactly. I think the model is great the way they have it on the Fannie Freddie, but it just cuts so many people out,
Right.
Like people who can afford $4,000 a month in rent.
Right.
Cannot afford a home loan.
Right. Which doesn't make sense. Yeah.
It does.
And they've never missed a payment. And
never missed a payment, but because they don't show that income, somebody who's singer, an actor, an actress, or
Right.
professional football player. The
Right.
way the money comes in, it's like, yeah. So that's why I looked at non-QM. I said, well, this is going to be the case continuously.
Yeah. Where do you find them?
Where do I find them?
Where do you find these people? Or do they find you? How do you set
You
out
know,
little traps or like little drop the lines in the water and like what's your bait? Like what?
I fell in love with non-QM in 2014. Like I said, 2008 and 9 when the whole market crashed and
they didn't have a solution. Yeah.
There wasn't no solution, and people were like, so what do I do? What do I do? And I'm like, well, I have this guy who can do a loan for you at 9.5. Will you want to take it? Sure, I'll take it. I don't care. I'm like, oh, you take it.
Wow.
So how many people like that are out there? And I started doing research. I'm like, there's millions of people out there. How do you find them? You just have to look at the category of people who say, you know what, my tax returns are not going to show what I make.
But do you email campaign? Do you do campaigns online? You buy leads? Do you refer a word of mouth? Like what's your
mainly through realtors.
Realtors, okay. And do you have multiple realtors?
Multiple realtors. So my best way, anybody who's looking for non-QM right now, is we take the model of educating realtors.
You take them to lunch, or you bring them food or anything?
Just through our publications.
So you do you have a newsletter?
A newsletter or a flyer. So we don't design a flyer. There's realtors get 300 flyers a day, right?
Yeah.
In their emails.
It's awesome. Yeah.
So why do they call us? Because we spend an average of maybe 2 weeks to design one flyer.
Really?
Yeah. We go through a rigorous, do you like it? Even so, the last person who says I like it or not is my 5-year-old.
Wow.
Yeah, Dad, I like it.
Oh, that's cool.
It looks good.
Yeah.
So it has to be attractive. It has to be educational. It has to be no salesy.
Mm-hmm.
It has to be, did you know this? Here's how you can do this. Here's top 10 ways you can do that. If you're a Uber driver,
mm-hmm.
here's an option for you.
Here's how you get a loan.
Yeah.
Wow.
So address the person specifically.
Yeah.
Don't go out there and try to say, I got best rate. I got all the good rates. No,
right.
We never ever talk about rates.
Because that's when the realtor puts the shield up. I don't want to hear it. Everyone's telling me the same thing. Yeah.
So we are focused on realtors, and we're focused on medical doctors.
Wow.
Because a medical doctor, yes, they have $400,000 on their W-2 a year, but they always want to buy 11 properties, 12 properties, and they want to buy more than that, and they have humongous student loans, that will kick them out of the normal.
The DTI is going to be high, yeah.
So the realtors will call us generally and say, hey, this is for my client who's buying a house. Or 50% of them will call us. This 50% of them will call us and say, you know what, this is for me.
Mm. The realtors.
Yeah.
Yeah, they need loans.
Because
they're 1099, right? And if you get a realtor loan and it's a decent loan and you do a good job, then they're gonna be like, oh, you gotta call my guy Andrew.
Yeah, you gotta call my guy Andrew. So we've been fortunate to grow that channel of originating business.
That's good.
Yeah.
Non-QM is way more fun than doing Fannie Mae. Just.
I've had people when I had to pivot from the pandemic, I've had people cancel on me on the signing table because somebody gave them 0.125 rate better.
I know, I've had it too where they're like, oh, he waived a credit report fee for $25.
Yeah, credit report fee. Yeah, I've had that too.
It's like, really? Why didn't you call me? I would have, I'm sorry I didn't take it off sooner.
Yeah, like what,
it's ruthless, yeah. So, and it's a thankless job, I think, when you're doing loans like that, because they think it can get a loan from anyone. So who are you to be thanked?
Yeah, because you can't compete with Quicken and guaranteed rate and so on Loan Depot. So, but fun. But I think non-QM again, they have a need that the big boys cannot meet.
Right.
And they're not just going to sit on the sideline and wait and go do W-2 for 2 years.
Sure. No, they don't. They want to own now. They want to own. They don't want to wait.
Yeah.
So I always liked non-QM, and that made it easier for me than doing the other stuff because it was so boring. But some people will go, they'll shake their head and they're like, non-QM, it's too hard.
Yep.
Do you think, in your opinion, do you think non-QM's harder than doing government and doing Fannie Mae loans? I mean, I know it's harder technically because you don't get what's the, I don't even know. I forget the name of it. It's the quick Fannie Mae approval. What's it called? The DU.
Yeah, DU, yeah. Non-QM is 10 times easier.
If you know what you're doing, right?
Yeah. And honestly, I don't think there's, it's 10 times easier. If you consider the guideline of a non-QM loan to an FHA or conventional, go read the 4001 rule book and compare it to a bank statement guideline.
Right.
That tells you that there's so much less nuances in non-QM, but obviously most people, they just don't, they haven't been patient enough to say, okay, hold on.
Yeah.
All of these people who I know who own businesses. So what do? They rule them out.
Right.
And go do something else.
Yeah. And then they're underserved. What about like processors? I know processors, they have a hard time sometimes saying, oh, not a QM loan. I don't want to do this. They'll put it at the bottom of the stack because they can just run to you and do all this stuff. And then they're, okay, got my non-QM loan. I got to do this. Like, what do you tell processors to, is it just also just practicing it and doing it more and more? Or?
I think it's them, when for us, what's happened is we have processors who came from the QM world, Fannie, Freddie.
Sure.
And we say, see, when we have an interview, I say, this is what I do. Well, how do you do that? I say, well, it's pretty easy. Let me show you.
Yeah.
Like
once they've done one.
Yeah, it's as easy as, okay, so, the account executive, like ours at Fund Loans, Joseph is perfect at this. He'll calculate the income. So what you do, you just plug it into the system like you do.
Right.
That's nothing else.
Let them do it, and then they come back with
the
income.
I'm like, yeah, that's it. Oh, okay.
Yeah.
It's just, them getting educated about it. I think that's what it needs, yeah.
Yeah, non-QM is that's also one of my missions, to make it easier and easier. Is because people have just banged their heads against the wall saying it's so hard.
I mean, we have a goal and a role to play as brokers and loan officers. We are. I mean, for me, I feel like I am going to work really hard to become a face of the non-QM, because people need to know that this is an opportunity you need to take advantage of now.
Right.
I mean, you have no idea how people, when they call me, they're like, my realtor told me to call you. So how come you guys can do this and Quicken can't?
Yeah. What do you say?
I'm like, well, there are two reasons. Number one, Quicken doesn't do this kind of loans.
Right.
Well, are you guys for real? Is this some shady stuff? You're going to run down the country again? And you're the reason why everything went down in the first place. I'm like, no. Maybe you can ask Countrywide, but not us.
This is not us.
No.
There's now a lot of laws in place.
Yeah, there's a lot in place, and putting 20% down on a loan, you're giving up a lot, to go default on,
We have so much equity in America now. So much.
My goodness, yeah.
I mean, if you think about it, I don't even know the percentage, but what I've heard is like, I think maybe it's 50% of purchases are cash. Mm-hmm. So that you look at that and you're like, okay, well, all these loans, there's not a lot of loans. There's a lot of opportunity, that means, right? Yeah. If someone's putting cash down to pull out some cash and maybe buy other properties. But the amount of equity in America is unbelievable, I think, more than it's ever been.
More than it's ever been. Yeah. And it's only going to grow over the next couple of years, because we have an upward trajectory of value, So I honestly think a lot of people too, they're at that point when I talk to them, like, so what do you think is going to happen to the market? I say, well, I mean, that's the same question I've been getting for 10 years.
Yeah. I'll wait till it slows down or till it crashes again.
Yeah, it's going to crash again. I said,
that other crash was 75 years in the making.
Yeah. It was different. This time around, there's a lot more regulation and, hearing from industry professionals like yourself and how things work, I don't see a crash coming. I don't see a crash unless there's some crazy. If COVID didn't take us down, then I think people should get off the sidelines and do stuff now.
Yeah, I mean the supply and demand is still so high for demand for housing, and So rates are going to go up a little bit. We know that that's going to happen. Inflation came out, and we knew it was going to be high, right? Because we feel it. We already know, but they're like, "Hey guys, inflation," and you're like, "Yeah, I see it at the grocery store and the gas pump and everywhere." But I think it's going to keep going at some pace for a while, until builders still aren't building. They're not. The supply is not growing, and a lot of people are flipping and improving homes. Then that's not creating more housing. It's just creating better, improved housing, which drives the value up still. But what do you think about? Have you seen any shift since the pandemic of people leaving W-2 jobs to go self-employed, or do you think there's going to be a bigger trend towards the non-QM because of that, or what are you seeing?
It definitely is growing. We've talked to a lot of people who said, hey, I was W-2. Now I started my business a year ago.
During COVID, right?
During COVID. A lot of this, there's millions of people who have made that transition during COVID.
Yeah.
Literally, millions, across the country.
I sensed that was happening, but I didn't. There's been this really tight push to get people, to get the businesses that are doing like 1099, like we saw with Uber in California. The regulations are trying to make it so people can't be independent. But at the same time, when COVID hit, a lot of people said, to hell with my job, I'm going to go do my own business.
Correct.
And work from home, and I can do two businesses, actually. I could do my job here, and I can do my side job or whatever. But so you're seeing that.
We are seeing a lot more gig economy
than
we've ever seen before. And I think because, consumers want convenience.
Right.
Way more than COVID has told all of us that you can do as well at home than in the office.
Yeah.
It's pretty clear all over the country. So are there some jobs that has to be done in the office? Absolutely, yeah.
Sure.
Hospital, things like that. Yeah, sure. Restaurant. But I think this is going to continue to grow. That's going to grow the size of non-QM over the next couple years.
Yeah.
Because you have all these people now who are starting now in 2021. By 2022, 2023, they will have had enough equity to say, you know what, it's time to buy a house. Look, I started my business. I'm now 2 years old in the business.
And they're making deposits.
Making deposits. I'm ready.
Right.
The essence of just saying, for a bank statement loan, for example, just saying, if I can show that I can make this much deposit every month consistently for 12 months.
Yeah. Then you qualify.
Then I qualify. And you put your down payment down. So we're doing a really good job now educating people about the opportunities that are available. DSCR has been a huge game changer for us in the last year and a half.
Yeah. And it's at, 85 LTV max?
It's up to that now. But what I love about that is it's giving investors opportunity to go do more.
Yeah.
Which before they're like,
I'm cashed out.
I'm not going to qualify. I'm not going to qualify. And now they're like, just down payment, which they have enough skin in the game.
Sure, that's enough. It's a lot more than what Fannie and government requires.
Yeah, they have enough skin in the game, and now they can go do better.
Right. Yeah. What other businesses are you seeing starting up? You see investors that are buying, real estate, but you see any other startups, because right now, being at home, the barrier of entry, having to go get an office and go get all these things and hire all these employees. Now it's like you can have virtual assistants, you can have remote employees, you can the barrier of entry I think is way lower. So, but what kind of businesses are you seeing start?
I think most businesses that we're seeing right now are those that are mostly people are gravitating more towards remote business. Anything that I can talk over the phone, get it done. Virtual assistants, they've always been there. You know? But just the fact that people want things done for them conveniently. Anything around that consumer, like delivering,
delivery food.
Delivering food is huge.
And they're making good money.
Yeah, and they're making great
way
money.
More than an hourly at a job.
Exactly.
Way more.
Way more. So that's only going to grow.
Instacart, you can make, I think, what is it, $50 an hour if you're more. Yeah. Sometimes if you're fast.
Way better than even driving an Uber.
Yeah.
People want concierge service.
Right.
Can I have my laundry done instead of me going to the, dry cleaners?
Right.
Just come get it and get it done. People who are even I did 2 loans for people who are cleaning homes, right?
Housekeepers?
Housekeepers. I mean, their income is way off the roof now because
Wow.
people need them more,
Yeah.
and they're charging more for that.
And it's hard to find.
And it's hard to find, and that's going to be the case for the next couple of years because there's a lot more people at home, moms at home with kids,
right?
A whole lot more mess,
sure,
than they're used to,
right? Yeah,
and they need that help, yeah.
Maybe even at-home chefs and at-home
chefs,
food preparers, because they don't want to go to restaurants, maybe they're COVID or whatever reason.
Yeah.
And
there's just so much happening at the same time, which I envelope all of that into this whole entrepreneurship. Entrepreneurship to me means non-QM loans.
Yeah, which is just going to get bigger and better.
Yep.
Tell us about the Tie and Hoodie show.
What is this? Tie and Hoodie show, yeah. Well,
I'm very intrigued. I don't know what it is.
Well, Tie and Hoodie, so I usually like to wear a jacket or a tie.
Yeah.
And I have this friend who he's always in a hoodie.
Yeah. Does he wear it up like that?
We just came up with that. So we've been on the radio, K-Day, 93.5 FM.
Nice.
And we're just talking about, we bring in guests and we talk about things that matter.
Yeah.
What was your story? How did you get here? Where are you going? And we've talked to, even with, we interviewed celebrity like Christine Divine, who's on KCAL 9, But what I've learned over the we've interviewed, I think, 52 people so far, from across the whole country. What I've learned is that, journeys are different and the hustle is real.
Yeah.
You can't tread life lightly and expect things to fall in line with you. You can't complain your way into success.
No.
I mean, yeah, you can go march and riot and stuff, but have a reason why you're doing stuff and make sure it's reasonable that people will comply with, not just, I'm going to wind my way through stuff. So it's been good learning, and we have a long way to go, Yeah.
What time is the show on? And you said 93?
93.5 FM.
Okay.
6:30 a.m. in the morning.
Early.
On Sundays.
On Sundays? Mm-hmm. That's an early Sunday morning,
It's an early Sunday morning.
You don't rest, do you?
There's time to rest, But I'm just so excited about the opportunity of what I know as an immigrant. Coming in here and knowing that, wow, you don't really understand when I said this country allows you to do that.
Yeah.
That phrase is not. I don't know how to. Anybody who's an immigrant understands that.
Yep.
They allow you to do that, meaning that there are medical doctors in other countries that are not even allowed to practice medicine.
Wow.
Or they are not allowed to even make a living. So America is a place where if you comply with the laws and you put in your best and you want to change people's lives, success will come to you financially, peacefully, So that's kind of what really kind of drives me, like, wow, I only have so much time, let's go to work.
Right.
So
yeah, when you see an opportunity and it's endless in a way. Right?
It is endless.
It's just how much do you want to work?
How much do you want to put in the time? And I try to nag my way through work. It didn't work. Again, thanks to my mentor, Marnie Avila, who said, you can't complain your way through success. You have to work. I'm like, okay, well, what does that mean? And she sat me down and said, this is what it means. So, but I was used to blaming other people for what I did wrong and my failures, Well, it was the credit card companies. They gave me all those credit cards and they didn't tell me I had to make a payment.
Right.
So I didn't make a payment.
Right.
I mean, I bought nice clothes and shoes and stuff, but,
right.
So, but now I've come to the point where I'm like, okay, if anybody's listening out there and say, okay, how do I get into non-QM loans? How do you get here, Andrew? Like, you just have to be crazy passionate about wanting to help people who FHA, conventional, VA, USDA cannot help.
Right.
Simple.
Yeah. And when you have that passion, it becomes fun and easy.
Oh, it's fun, yeah.
And when I say easy, I mean it's easy because you still like what you're doing. You're going to have rough days.
Yeah.
You're going to have some hard, stretches, but if you're passionate about it, it's not work like, putting in 12-hour day, on the out digging ditches or something.
Well, I mean, if they love what they're doing, that's fine,
Right.
But for us, our job is critically stressful.
Yeah.
But I think what I've learned to do is enjoy the stress.
Mm-hmm.
Because when an appraiser comes back and say, well, your house is only valued 600, they're like, are you kidding me? The neighbor just sold for 900,000.
Right.
So
yeah, that's a whole nother topic, right? Man.
Managing that kind of stress, it's kind of different. So that's, just. What's happened?
Let's talk about appraisers. What's happened to appraisers? What do you think? That, we have one side where it was too easy, right? You'd say, I needed $500,000 value. Can you get me the five? Oh yeah, I'll get you the 500. And that was bad, right? Because maybe it was worth 450 and you're pushing value and the appraiser's in on it, and and they didn't have any repercussions if that happened. The only repercussion is that they wouldn't be able to get your business in the future. So they were kind of under your thumb but now appraisers, it's like the opposite. And my brother-in-law's appraiser, so I don't hate appraisers. I like them, but I am just scratching my head going, have they just given up in some way? Not they all of them, but some of them just said, you know what, I just don't care about bringing in the value truly or work. Because I think sometimes it's hard. Appraisers work hard. It's hard to do the extra work to get it's easy to just bring a value in low, right? It's easy, and you get paid the same.
I think that's one industry or sector of the industry that's waiting for, a tech revolution. Look at what, Uber Eats or, this food delivery have done.
Right.
I mean, look at what Netflix did to, Hollywood videos and,
right.
I think that's what needs to happen, where they will have some great valuation methods that are digitized and...
Well, someone's going to come in with a small drone. It'll show up at your house, and it'll go through your house, and it'll be someone that works in, who knows where. Yeah. And they have a whole office full of cubicles, and they're just flying this drone through your house. And then you see all the quality of everything, and then
it's the pictures, and boom, done.
And the appraisal's done. Yeah.
Rather than having somebody drive through snow and mail the drone to their house, say, hey, just once you get this,
set it up,
call us,
and
we'll tell you what to do, and push a button, and the thing does
like a Roomba, like a Roomba.
Now you can keep the drone. We got what we need.
Right. Yeah.
Because appraisers, I mean, they are always going to be a critical part of what we do. But there was a time when, if you don't talk to an underwriter or go through an underwriter, you're stuck. Now automated methods are helping us get through that process faster.
Sure. Yeah.
Appraisal is that one where it's like, okay, what are we gonna do? I don't know.
Yeah, and I think what part of the problem is there's a lack of appraisers. There's not a lot. Not a lot, and the average age of an appraiser is up there.
I think they should start. The only way to solve this, honestly, is they should start, giving curriculums in college. So you can
to get new appraisers into
you can graduate in 4 years and you are an appraiser, because your first 2 years you take the classes and the remaining 2 years is and you graduate.
And then you have grads that are making money. I mean, it's a good job
right away.
It's a great job.
Great job. It is a great job.
Yeah,
so that's probably the solution to influx the system with appraisers. But until then, I think we're stuck.
I mean, you've probably experienced where appraisers won't even call you back, or they won't pick up the job because it's a little too far out. Or
nowadays, there's no repercussion.
Right.
It's no different from, I mean, not to be political, it's no different from when, we got to cut police, whatever, but, well, then you cut police, then
no one's coming to your door.
No one's coming to your door to rescue you.
Right. Yeah.
That's the same thing with appraisals.
Supply and demand.
Supply and demand. You reprimand an appraiser, he's like, okay, forget you. I don't want to work with you anymore. Well, that's one less appraiser when we're already short.
Yeah.
So I think tech needs to interrupt and that's the only way.
And it's coming. It's coming for all of us.
I mean, Zillow tried it, but it didn't work. I mean,
the Zestimate, right? They're like, we were just guessing. Yeah. That's so funny.
So, but
you were guessing. I know. We saw. Yeah, I mean, people would always get mad. My Zestimate was $2 million. You're like, it's not $2 million. It's 1.6.
Zillow says. I'm like, well, I mean,
Yeah.
Zillow is not an appraiser.
So do you talk about mortgages on your show?
I try,
or more just other topics?
Nah, yeah, we mostly try to talk about, what, we like to talk about what a good plan can do for you.
Financials.
Financials, don't spend too much. Don't try to please your neighbors, and go into mess and things like that.
Yeah.
We try to do that as much, yeah.
Are you listening to any good podcasts other than this one, of course?
Other than this one, of course, yeah.
Or any reading any good books right now?
I don't listen to any current podcast, but I'm a big fan of Jim Rohn.
Jim Rohn?
Yeah, RHON is the last name. Jim.
Yep.
Very funny. Talks a lot of practical common sense. You're gonna probably laugh your brains out, but
is it a podcast?
No, he's a speaker. He's probably
like YouTube,
dead and gone, but a lot of YouTube.
That's cool.
He's one of the ones I listen to a lot, more than anything else. Because he just says what it is.
Yeah.
And
we need more of that, right?
Yeah.
No bullshit.
No bullshit.
Just
straight to the point.
Yep.
And so I thought about that, and he's given me a lot of ideas on how to treat our customers, and so he's given me a focus of trying to win a loan is one focus. Trying to win a customer is a different focus. I don't want to win a loan. I want to win a customer, because habitually people just don't know that somebody who buys a house will buy another one.
Right.
It's only a matter of time.
Or they'll want to refi, right?
Yeah, it's only a matter of time.
Or their kids will want to buy, or their cousin or uncle, whatever.
So we're laser focused right now on winning a customer.
That's good advice.
People call it kiss ass. No, we don't. That's not what we call it. We call it, meeting their needs and their demands reasonably, as much as we can.
Right.
So that they can think of us the next time.
Well, people want to work with people they like. So if you make yourself likable, right, and you make them have a good experience and realize that you're a good person to work with, then you can create customers for life.
I've been going to the same dentist for 15 years. Now, I've moved 2 hours drive. I still drive there 2 hours.
Wow.
To the same dentist. So if loan officers can think about that and say, okay, how long is my career going to span for? So I'm thinking I want to do this for another maybe 20 years. So in my hope and goal is I want to have 1,000 people who know me by name over the next 20 years.
Yep.
And if that 1,000 people, half of them can give me one deal a year, so that will bring my volume to 500 a year.
Yeah.
It's easy math, but it takes a lot of work to say, I care about you, John. How are you doing? Not, guess what, John, rates are low now. You should refinance.
Right.
Jeez, get out of here.
That's when you get into the trap of being, feast or famine in this business. Yeah. And so many people, they have good years and bad years because that's all they care about is the rates and not building customers for life and not building a true business.
Yeah. I think that's what we are going to be focusing on more than anything else. And I think NonQM gives us that tool to consistently have something new to say.
Yeah.
Most of the people we talk to now, I never mention FHA, conventional VA.
Right.
It's like, how are you doing? Good. So how's the house coming along? Good. So you're thinking you might want to buy another one? Well, we can we? I'm like, yeah. Let's look into it.
Yeah. Get your real estate empire going.
Yeah. Let's look into it, and that's how the conversation goes. Rather than what's your rate.
Yeah, that's true.
Yeah.
You're helping them build wealth and future, value for their family, and that's really good. Yeah. Have I missed anything? Is there anything else you want to say?
Besides the fact that I'm in love with NonQM, and I if I was to throw a word out there in terms of lenders, we deal with a lot of lenders, but fund loans has become our number one.
Thank you.
Because you guys basically get what you it seems like you've studied customers who have been left behind and say, hey, we get you, we can help. And I think if a lot of one of the things I also really enjoy about working with you guys is that the account executives actually coming from an underwriter who became a loan officer.
Yeah.
You don't understand how annoying it is when you talk to an account executive who you know more than them.
Right.
And then they tell you,
and they try to BS you a little
yeah,
bit.
they try to, and then they tell you, oh, let me go find out and I'll get back to you. I'm like, dude, you should know.
Yeah, you should know. This is your job. This is what you get paid for. Yeah.
It's not like the guidelines are, it's in a safe box where you can't touch it.
Right.
I already read your guidelines. I just want to know whether your underwriter agrees with me.
Yeah.
Well, so that's one of the things that I think I enjoy about working with you guys the most. It's like, you're like, okay, so when we meet a lender and I'm like, give me your guidelines. Well, I'm not sure we're allowed to do that. It's a guideline. Okay.
Yeah.
Like, I'm supposed to know before I bring it to you.
Right.
So we enjoy that a lot. I mean, so I will encourage anybody, who's thinking about non-QM, they should definitely consider you guys, fund loans. But more importantly, just do your job. Read
the guidelines.
Read the guidelines.
Understand. Yeah.
Understand. If you don't understand, ask questions.
And start doing more non-QM because it's not that hard, right?
No.
Once you start doing it, you get better at it, and you just, and it's fun. It's actually kind of fun.
It's fun. It's fun. I think it's changing a lot of lives. People now come to me 3-4 years later. Wow, look at my portfolio. Look at portfolio right now. I'm like,
look at all the money I've gained and my equity, and it's
Yep.
life-changing. It is.
Life-changing.
And now they can afford to send their kids to college or whatever it is that you help them do.
Definitely is life-changing. So we look forward to doing more. So thank you. Appreciate it.
What's the name of your company?
Integrity Credit Corporation.
Awesome.
And we are in the process of changing our name.
Okay.
So hopefully it's going to come up soon, but we are going to become Believe Lending.
Believe Lending. I like it.
We want people to believe that they can become homeowners.
I like it.
Or equity holders. So,
very cool. Well, thanks for coming on the show today, Andrew. I appreciate it.
Thank you so much, Jon.
All right.